Windsor, Mascot, Rosebery, Riverstone, parts of Western Sydney. If you live near any of these, or you're thinking about buying there, this one's for you. None of these places are unpleasant to live in, by the way. Ask anyone there and they'll tell you, straight up. It's quiet, it's normal, nothing wrong with the street. The problem isn't how it feels to live there. It's what the bank, the insurer, and the valuer already know about the address and haven't told the owner yet. There's one suburb on this list where 3 separate risks stack on top of each other at once. I'll get to it. And by the end, I'll show you exactly how to check your own address, not just these 5. Here's how it actually works, underneath all of it. Insurers don't look at your house. They look at a model, decades of flood data, fire data, and now heat data run through software that spits out a probability, then a price. Once that probability crosses a line, 3 things tend to happen, roughly in this order. Premiums go up, sometimes well past what feels fair. Insurers start pulling out of the postcode altogether. And then the part nobody warns you about at settlement. The bank stops lending. Because most lenders won't approve a mortgage they can't insure. No insurance, no loan. No loan, and your buyer pool shrinks to cash only. Quick example, and this one's illustrative, not a real case, just to show how the mechanism plays out. Say you buy a place for $850,000 in a flood-modelled catchment. Year 1, insurance is a fairly normal $15,800. A flood hits nearby, your place isn't touched, not a drop inside, but the model re-rates the whole postcode anyway. By year 3, your premiums more than tripled, one insurer's already knocked you back on renewal, and a refinance application gets declined. Not because your finances changed, because the bank's risk model did. The house hasn't moved. Its financial standing has. This is more or less what's playing out around Windsor and Riverstone. Both sit in the Hawkesbury-Nepean catchment. The one the New South Wales Flood Inquiry rated as the highest risk catchment in the state. Windsor's downstream of a sandstone gorge that acts like a bottleneck, so floodwater backs up instead of draining away. Some residents in the area have described being knocked back on insurance renewal by a major lender-owned insurer, despite never lodging a claim. Take that as anecdotal. It hasn't been independently verified, but it lines up with how these models are known to work. The postcode's flood profile counts for more than your personal record. Now, fair pushback here. Isn't this just insurers doing their job properly? Pricing risk accurately isn't some conspiracy. That's literally what insurance is for. If a place genuinely floods more, it should genuinely cost more to insure. No argument there. Where it gets murkier is the model prices the postcode, not the house. 2 places on the same street, one up on stumps with decent drainage, one that's never seen water, can end up with the same risk score. Because the model runs on catchment data, not on what's actually sitting on the block. Fine-grained at the suburb level, blunt as anything at the household level. And that gap is where people who've done everything right still cop the same price as the ones who haven't. The model's not wrong about the suburb. It just doesn't care about your house. Fluting's at least visible. You can pull up a map. This next one's quieter because it won't show up on any map you'd think to check. Parts of Sydney's inner south and southeast carry decades of industrial chemical history. Manufacturing, waste processing, that sort of thing. Government-run remediation has cleaned up a lot of it, properly, to certified standards. But the market doesn't reset the day the certificate's issued. Valuers and buyers still apply what's called a stigma discount. The price drops because of the site's history, not its actual condition now. Same illustrative exercise. 2 houses, same street, same age, near enough identical. One's on land with a documented industrial history that's since been fully remediated. One isn't. Comparable sales patterns in similar markets suggest the remediated one can still sell for noticeably less, purely on reputation, even when every test comes back clean. That gap doesn't close on its own. It closes when enough time passes that buyers stop asking the question, which can take a generation. The least visible risk of the lot because it isn't priced in yet. It's about to be. Western Sydney's heat corridor already runs measurably hotter than the rest of the city. Thin tree cover, dark roofs, small blocks packed close together. Heat's not a standard line item on a home policy the way flood and fire are. But fire and flood weren't always priced in either. Insurers only built those models once there was enough claims data to work with. Heat's on the same path, just earlier on. So buying into one of these estates now is, in effect, a bet that the industry doesn't finish building that model before you need to sell. Right, the suburb I mentioned at the start. The one where none of this is theoretical, because all three are happening at once. Parts of the Mascot Rosebery Strip sit under the flight path, above a shallow aquifer with a documented contamination history, and, as new apartment blocks replace the older low-rise stock, inside a shrinking tree canopy that's pushing local temperatures up. 3 separate outfits, an insurer, a bank, a valuer, landing on the same caution for 3 unrelated reasons, on the same streets. Nobody living there would call it a bad suburb day to day. It's quiet, it's fine. The paperwork's just started disagreeing with the lived experience, and the paperwork's what decides whether you can sell. Here's how you actually check this for your own address, wherever you are. 3 things, all public. Your state or council's flood mapping portal. Most states have one. Just search flood mapping plus your state to see if you're sitting inside a mapped catchment, not just whether it's flooded before. Your council's contaminated land register for anything with an industrial history nearby. And ask your insurer straight out whether your postcode's seen premium hikes or insurers pulling out over the last few years, even if your own policy hasn't moved yet. That's usually the early warning, well before it turns up on your renewal notice. None of this means these suburbs are a trap for everyone. Cash buyers, people who aren't going anywhere, anyone who's actually checked the maps before buying, they do fine here, often for a lot less than the safe suburbs cost. But there's a slow, procedural sorting going on underneath the property market, and most owners only find out about it the day they try to renew a policy or refinance, which is exactly the worst day to find out. So here's the actual argument worth having in the comments. Is this just insurers pricing risk more honestly than emotion ever could? Or is postcode level modelling blunt enough that it ends up working like discrimination, whether anyone intended it that way or not? If you've actually been knocked back on a renewal or copped a stigma discount in any of these suburbs or anywhere else, that story's worth more than my take on it. Tell it below. Melbourne's bushfire corridor is next in this series. Subscribe if you don't want to miss it.